Intel stock investors got a huge update from the management team highlighting a change in its expansion plans. Additionally, Intel provided an update on its cost-cutting plan. These changes are all in response to investor feedback management has received. The disappointment from investors increased when the company paused its dividend payment earlier in 2024. Investor patience with Intel is decreasing, and management knows it needs to take steps to alleviate those concerns. So let's take a look at what Intel plans to do. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the steps Intel is taking is a more efficient Intel Foundry manufacturing build-out. It has added billions of dollars in capital expenses to build out its foundry business, where it will produce semiconductor chips for outside companies, not for itself. And that investment is something that has concerned Intel investors. So management saying that their manufacturing across 3 continents have laid the foundation for a world-class foundry for the AI era. But now that we have completed our transition to EUV, which is the latest generation technology in semiconductor manufacturing, it's time to shift from a period of accelerated investment to a more normalized cadence of node development and a more flexible and efficient capital plan. In other words, we understand you, the shareholder, are concerned that we spent too much money building out this business, updating technology, increasing capacity. And so now that we've built out so much and we've made so much progress, we are now slowing down. And so that's what Intel management is telling investors here. And most notably, they are saying that we will pause our projects in Poland and Germany by approximately 2 years based on anticipated market demand. So these 2 projects are already underway, but they will pause them for 2 years to let the market demand grow and, in the meantime, more importantly, let Intel's business stabilize, let them start generating more cash flow. And then 2 years later, when their cash flow from operations are better positioned following these investments, they'll be reaping some of the benefits of these investments, and then they can bring back those plans and expansion capacity. Still, they remain committed to the U.S. manufacturing investments and are moving forward with their projects in Arizona, Oregon, New Mexico, and Ohio. And they remain well positioned to scale up production around the world based on market demand as we grow our foundry business. So the U.S. manufacturing expansion plans remains as intended, and the key for these is they are getting billions of dollars of subsidies from the U.S. government to help build these new facilities. And so those are going as planned. The projects in Poland and Germany, which are less of a priority for Intel, they will pause for a couple of years. Now, this is based on market demand, right? So if market demand turns out to be accelerating much faster than they expected, they can, of course, resume these sooner than the 2-year pause. And the same thing is true if it turns out worse than expected. They can delay it much longer. It's up to management discretion here. So they're doing a little bit more market-based expansion here. They're becoming a little bit more cautious in the expansion, whereas a year ago, 2 years ago, they were more all in these efforts. They were more certain that the market would be there for these products when they are ready to produce. But now they are taking a more cautious approach. So this is both good and bad for Intel stock investors. It's good in that management is, kind of slowing down with these capital investments because it's really hurting the business. I can show you the company's operating income over a trailing 12-month period has collapsed. They were generating over $20 billion in trailing 12-month operating income, and that's fallen to just $500 million, and it was negative for several quarters. So these investments are really hurting the business, and you can understand why they needed to pause their dividend, because they had just experienced a huge change in profitability, going from over 20 billion, close to 30 billion, to all of a sudden negative and flat. And this has been over a year and a half now. It wasn't just like a 1 quarter thing. And so understandably, investors have put the pressure on the management team saying, look, you've done a lot in these last couple of years. We've got to now focus some on cash flow and profitability, stabilize the business, and then you can focus your efforts again if you need to do more expansions and more tech investments. But for now, got to stabilize the business. So Intel's saying that their AI investments, including leadership in the AI PC category, the strong position in the AI data center, and the accelerator portfolio, will leverage and complement the x86 franchise with the focus on enterprise and cost-efficient inferencing. And this is what Intel is betting on, that once these companies use NVIDIA accelerated computing to train these large language models, that they will look for more cost-efficient accelerated portfolios or accelerated computing chips to do the inferencing. The inferencing, which is operating the large language model, doesn't need the latest generation, most expensive technology the way that training the models do. And so Intel is betting on the fact that once these companies have trained these large language models, they might prefer to go to more affordable chips for inferencing, which is what Intel is offering. So in addition to slowing down the capital investments, Intel is also shrinking the organization, letting go of approximately 15,000 people by the end of this year. And they provided us an update here saying that they're more than halfway through the reduction target of approximately 15,000 by the end of the year. They're also implementing plans to reduce or exit about 2/3 of their real estate globally by the end of the year. And that's one of the added benefits when you let go of so many people. You don't need as much office space, so you can reduce some of that office space. Also, I'm surprised more companies are not reducing more of their office space and going more towards the hybrid or remote working environment. I understand some of these companies need more hands-on, but some percentage of your employees can certainly work remotely and thereby reducing your office expense and lowering your employee expense. It's a win-win solution. I'm surprised that more companies are not implementing worldwide. And this is one of the benefits. Not only do people get to work from home, which most people prefer, but also you get to save your office expense. You don't need to pay for as much office space. You don't need to have the equipment for your workers when they come into the office. You don't need to pay for a computer, a laptop, a monitor, etc., etc. So it's a reasonable idea here, and I'm glad Intel is at least shrinking its real estate globally by the end of the year. And finally, as a parting message, management says that this is the most significant transformation of Intel in over 4 decades, which is true. This has been a massive transition. I shared with you how many billions in its operating income have been decreased, how many tens of billions of dollars it's spent in research and development and capital expenditure to expand. And not since the memory to microprocessor transition has the company attempted something so essential. So it's a big change, and big changes are risky. They are risky because sometimes they don't go according to plan. Sometimes there are steps that are overlooked because you're trying to do so much so quickly. And so there's a big risk associated with these massive transitions. And you can understand Intel stock price is down because investors are more skeptical than they are confident about Intel's reaping of investments after they've put out the effort. They're concerned that the benefits of these investments will not be what management is expecting. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.